welcome in our guest as well. Avinash Gorakshakar, founder and head of research at Avinash Mentor Research Services, is joining us now. Avinash, the first question that is coming in is from Shankar, who is writing us from Bengaluru, asking about Samvardhana Motherson. He's got 2,500 odd shares at the levels of 121 and wants to know if he can go ahead and add maybe 1,000 more shares at the current price or wait for some correction. What would you recommend?
Yeah, good afternoon, Mahima. I think he could definitely think of adding a little more quantity here, considering the fact that it's a well-established vendor to most of the global as well as domestic OEMs here. And I think the tailwind in the automotive sector continues to be quite solid. I think we have seen very strong numbers in the month of March. So typically, whatever ground reports we have been meeting most of the companies, they've been telling us that demand continues to be robust, although margin pressure could come in. Some amount of post-inflation costs definitely are going to kick in. But I think overall the volume growth still continues to be good. So I think, if the investor can hang on for the next 12 to 15 months, he can definitely think of adding. And I think he could add this gradually. The markets being volatile and, considering, today is the last day, the deadline for the US, Donald Trump's deadline. So maybe tomorrow, day after, the markets could correct, if things don't go as per plan. But definitely, I think he could chip in and buying, say, 20-25% of he wants to buy. So it's a good company with a good management kind of bandwidth. And obviously, the end customers are also doing well. So longer term, we are quite positive here.
Got the view, Avinash. And of course, welcome to the show. The next question coming in is on Apollo Micro. So Avinash, let me stick with you. Viewer Rao from Hyderabad is actually holding shares at 270 rupees per share. Holding roughly around 200 shares, Avinash, and his question largely is if he can continue to hold these shares for the next 3 years. Now, the last 1 year return, Avinash, up over 80%, down 40% from the highs though of almost 332. Do you feel that was just exuberance and there could be some time correction in that sense for a counter that's done well? What would you suggest for Apollo Micro?
No, I think, Apollo Micro is a defense player, and I think they're sitting on a reasonably good order book, Puneet. My sense is, yes, I think initially the stock had gone up very fast in a very short period of time. I think the stock will consolidate for some time, but I think defense is one space which is going to grow quite rapidly over the next, say, 2 years. And I think hopefully if new orders come to the company, that would actually, increase the visibility of business for the company. So I think he's got a 3-year view, so definitely he should hold on. I think he should not look at the short-term, scenario in the market. But even in this market, defense is a space where I think can give you a decent risk reward, provided you can give in some time. So continue to hold, I think, good long-term prospects.
Okay. All right. So that's the view coming in on Apollo Microsystems. But viewers who are just tuning in, of course, you can send all your queries on WhatsApp, but also call us and talk to us online and ask your stock-related queries. Moving on to the next one, which is coming in on Zydus Wellness. This is from Rakesh, who's writing us from Hyderabad. He's bought at the levels of 495. He wants to know the target on this particular counter. Today also it's seeing gains of about 2.8%. If I'm not wrong, it touched an intraday high of almost 15% in trade yesterday. Avinash, your view overall on Zydus Wellness?
So I think longer term, we continue to be positive here. I think the company should do well even in FY27. But I think, valuations are not cheap, so they are fair to expensive. So I think somebody who can hold on for the next 12 to 18 months can definitely expect a decent risk reward. Our sense is that 27 could be definitely much better than last year. But I think time frame wise, I think a slightly longer time frame is advisable here.
Got that view, Avinash. But let's continue with the next set of queries as well. This one is a very interesting one on KPIT Tech. Now, Ekam Barai, who is a regular viewer of the show, is holding shares at 1,147 rupees per share. So he's sitting on a loss of almost 33,000 for his 75 shares. Avinash, this is a tricky one, and he's asking a 2-year view on KPIT. Now, we've seen the Q4 preview reports come in for the ER&D space. There is some good growth expected for Tata Tech. KPIT continues to be in the fray where analysts are also hoping for some better quarter. How are you viewing the stock now, and what would be some of the key triggers to watch in Q4?
No, I think my guess is that this business is going to be sustainable because inherently Indian companies have enjoyed the skill sets. They also have the kind of tenacity to withstand short-term volatility. So Puneet, I think if the investor has a two-year view, he should actually take the advantage of the market and average a little bit. I think definitely since it's a two-year kind of call, the risk reward could definitely be better because once the dust settles down, the geopolitical conditions become conducive. I think markets are definitely going to look at fundamentals, and obviously next year is going to be a better year. So I think my sense is that yes, if the investor is not looking at a short-term view but a long-term view of at least 12 to 18 months, then I think he should average a little bit and stay invested. I think the quarter four numbers once they come out, what kind of commentary the management gives, what kind of order wins they expect in the next 1 or 2 quarters would be very important. But the management bandwidth is very solid. I think the promoter is also very dependable and has delivered in the past. So I think definitely one should add, but take a long term view.
Okay, all right. So that's the view coming in on KPIT Tech. The next one is from Sri Kumar, who's writing us from Hyderabad. Wants to know if this is the right time to make an entry into something like a Titagar for the next 15 months. Would you recommend that, Avinash?
Yeah, I think, see, my sense is it is sitting on a very large order book, not only from the railways, but even from the metros. And the stock has corrected quite significantly. But I think longer term, at least 12 to 18 months, if one can withstand the volatility and can put in this kind of time frame, only that investor should come and chip in. Because in the near term, numbers may be lumpy, they may not show the kind of growth. But FY27 definitely seems to be a good promising year. So definitely one can add at the current level, but keep a time frame of 12 to 18 months.
Got that view of Avinash. We also had that note from Jeffries yesterday initiating coverage where they preferred Titagarh over Jupiter Wagons. Avinash, just a follow-up actually, is that your preference as well? Do you feel Titagarh is a better pick versus Jupiter Wagons at this point of time in terms of valuations? Because I think the valuations for Jupiter are cheaper, but the growth expectations are better for the former, right?
Yeah. I think see, Titagar is a much older and a well-established player and has got a much broader product mix. In fact, they have an overseas subsidiary which caters to their overseas clients. Plus, the domestic business, is going to be driven by large investment in metros. And plus, railways are expected to, announce another large wagon order. Currently, Titagar enjoys the largest order kind of share in the wagon mix. So I think Jupiter is also good, but I think in terms of the profile, if one were to choose, I think Titagar would definitely qualify better. Definitely, I think longer term both are good, but Titagar could definitely be bought at the current levels.
The second straight day where you're seeing those gains coming in for those wagon players, and you saw both those stocks doing well today. Balu Forge is the next question that M. Ahmed from Delhi is actually asking us. He holds shares at 470, holding 100 shares at this point of time, and asking a question if it's the right time to buy more at this point. Avinash's buying price is not very far away from the current market price also of 448. We've seen Class A truck orders also do well. Now, while a smaller share for Balu Forge, how are you viewing this space? Is this something that's on your preference, or would you like to bet on the bigger names like Bharat Forge amongst others?
No, I think see the entire auto component space, specifically for auto component, specifically powertrain components. Definitely, Bharat Forge is a promising, well-established blue chip player. But Balu Forge has been also gaining market share. They are largely present in the crankshaft category. My sense is that if the investor can hold on for the next say 1.5 year, definitely numbers for 27 should also be better. In fact, many large prominent HNIs like Ashish Kachola still continues to hold this stock. So I think the stock is in safe hands, but I think it has been very volatile. So keep a time frame of 12 to 18 months. I think one should definitely get a decent risk reward.
Got that view, Avinash. But continuing with the questions and a lot of them that we're getting in the auto pack today. Sayan from Kolkata has this question. He wants to invest in the two-wheeler space and asking if the valuation-wise Hero MotoCorp is a good long-term bet. Avinash, we've actually seen almost a 20% correction on quite a bit of names. Even Eicher Motors has come down now to 6,500. What's your preference here? Is Hero one of them? And how do you look at the space now?
No, I think two-wheeler players, I think if you take Hero Motor and TVS, these seem to have outperformed very well. Bajaj Auto has also reported very strong numbers for the month of March. So I think two-wheeler market should continue to do well. And whenever rising crude prices happen, there is a tendency that two-wheeler sales move up because they are more, fuel economical. But I think overall, the rural markets have also picked up. Interest cuts have happened. The GST cuts have happened. So all this has resulted in a very good demand push. So my sense is that our preference would be Hero Motor because even the rural market would definitely grow quite rapidly for the company. So definitely within two wheelers, if one can look at buying Hero Motor maybe in a SIP fashion, maybe on every decline, that could possibly be a good risk reward kind of acquisition as of now.
Okay. Next caller, I think Venkatesh is calling us from Hyderabad. Venkatesh, very good afternoon to you. What's your query about? Hi Venkatesh, can you hear me? Okay, I think we seem to have lost the caller, but we do have his query. It's on Easy Trip Planners. I think he's bought 4,000 shares at the levels of 16 per share. The stock has gone down to 6 rupees now, so he's sitting on a loss of around 37,000 odd rupees. Avinash, I'll come to you on this one. What should he do?
Mahima, can you please repeat the name of the company, please?
Easy Trip Planners.
So I think my sense is I think it's better that he exits the stock because there have been some compliance issues also. And I think, markets have been quite worried because this group has diversified into a lot of unrelated sectors. So my sense is that unless we get a very strong set of numbers in Q4, the stock is unlikely to get re-rated significantly. So I think at best, the investor can wait for Q4 numbers and then take a call.